Ever wondered if there's more to the silver market than meets the eye? What if I told you there's a warning from a BRICS alliance that could send shockwaves through the silver investment landscape? If you're a silver investor or even just curious about the precious metals market, you're in for a treat. In this video, we're joined by a true expert in the field, Andy Schectman, the CEO of Miles Franklin, renowned for his expertise in precious metals, who will share some crucial insights that could have a lasting impact on your investment strategy. Let's dive in. As investors navigate the ever-shifting tides of the financial world, the allure of precious metals continues to stand the test of time. At the forefront of this arena are two enduring assets, silver and gold. These precious metals have assumed a pivotal role in portfolios, not just as hedges against uncertainty, but as indicators of global economic health. Silver's multifaceted nature sets it apart in this intricate landscape. Its industrial applications, coupled with its historical status as a store of value, contribute to its appeal. Meanwhile, gold, the timeless emblem of wealth and stability, maintains its allure. The market is a realm where price movements can signal economic shifts and geopolitical tensions. In this context, the significance of these metals cannot be overstated. Price manipulations is a concept that has far-reaching implications for investors and the broader financial landscape. Price manipulations involve orchestrated efforts to sway the value of assets, often in ways that might not be immediately evident. The impact of such manipulation reverberates throughout the market, influencing investor confidence. In a recent turn of events, BRICS, an alliance of influential emerging economies including Brazil, Russia, India, China, and South Africa, has issued a warning about the potential of price manipulations within the precious metals market. This collective call to vigilance reminds us that even seemingly robust markets can be subject to external forces that manipulate prices, affecting supply and demand dynamics in profound ways. The recent integration of the Shanghai Cooperation Organization and the Eurasian Economic Union into the BRICS alliance has set the stage for a great transformation in the worldwide economic landscape. The strategic move signifies a momentous leap towards challenging the conventional financial order and reshaping the intricacies of currency and trade relationships. The significance of SCO and EEU's incorporation into BRICS resides in their collective might. The expanded alliance, encompassing the BRICS nations, Brazil, Russia, India, China, and South Africa, in tandem with SCO and EEU, forms an imposing economic bloc. While the initial objective may revolve around establishing a settlement currency, the implications extend far beyond. This coalition possesses the potency to redesign the global monetary framework by introducing an alternative to the dollar-centric structure, heralding an entirely new epoch of economic sway. A strategy often associated with these manipulations is the methodical draining of exchanges. Picture the highest echelons of the precious metals sector, including the LBMA, ETFs, and the Shanghai Gold Exchange, along with the COMEX, experiencing a carefully orchestrated decrease in available assets. This deliberate drawdown isn't just a random fluctuation, it's a strategic move that can disrupt the equilibrium of supply and demand. Andy Schectman offers a series of eye-opening insights that shed light on the current state of silver investments. One of the most striking insights from Schectman's analysis involves and revolves around a massive drawdown that's been taking place at the very summit of precious metals exchanges. Picture this. Top-tier platforms like the LBMA, the Shanghai Gold Exchange, and the COMEX experiencing a substantial reduction in available assets. The value of billions worth of precious metals being systematically drained away isn't mere coincidence. It's a deliberate strategy. Beyond the exchanges, Schectman's insights extend to the looming specter of national debt. His analysis paints a stark picture. It took an astounding 209 years to accumulate this initial $1.8 trillion in debt. In an astonishing twist, another $1.8 trillion was added in just 8 weeks following a recent debt ceiling crisis. Central bank actions come under Schectman's insightful scrutiny, with a focus on the Bank of Japan as a prime example. Attempting to normalize balance sheets after extensive rounds of quantitative easing lead to an unexpected $2.1 billion emergency bond buying operation. This real-life illustration vividly demonstrates the challenges and complexities that arise when trying to undo the far-reaching distortions brought about by such interventions. Another crucial facet of Schectman's analysis revolves around the phenomenon of accelerating de-dollarization. This global shift, catalyzed by various factors including concerns about the trajectory of the United States and geopolitical changes, marks a significant inflection point. As Schectman keenly observes, these concerns aren't lost on the international stage, particularly among influential nations like those in the BRICS coalition. The implications of this trend reverberate through the market, reshaping investment strategies and driving increased interest in precious metals. In a world where gold often takes a spotlight, Andy Schectman directs our attention to silver's undervalued status, while gold tends to grab headlines. Silver's potential as an investment often goes unnoticed. Schectman's keen eye discerns a remarkable discrepancy. Historically, the gold-to-silver ratio has averaged around 16:1. Yet, in recent times, this ratio has soared much higher, surpassing 70:1 at certain points. Schectman's insightful analysis encourages investors to consider the potential gains that could emerge from this silver undervaluation. When it comes to gold, Andy Schectman brings to light a fascinating phenomenon: the revaluation of this precious metal in global economic discussions. While gold has long held its position as a store of value, Schectman discusses how its role is shifting from being simply a hedge against inflation to a broader instrument of financial security. As economies evolve and the world grapples with geopolitical uncertainties, gold is regaining its significance as a cornerstone of stability. Andy Schectman doesn't just stop at discussing silver and gold separately. He skillfully navigates the duality between these two precious metals. He highlights how both have unique characteristics that make them valuable in their own right. Schectman's advice carries a weight of experience and the wisdom of a seasoned expert. He urges caution as we navigate this landscape, a sentiment that resonates particularly in the market known for its unpredictability. Schectman's counsel is not just about shying away from the market's ebbs and flows, but about approaching it with a discerning perspective. One of the gems Schectman shares with us in his insight into the value and adaptability of the 1 to 10 ounce gold coin. Imagine holding in your palm a coin that's just a fraction of an ounce, yet brimming with liquidity and historical significance. Schectman's endorsement of the 1 to 10 ounce gold coin is a testament to its potential as an investment tool. This coin is not just a symbol of wealth, it's a tactical investment choice that adapts to the nuances of the market. So why the 1 to 10 ounce gold coin? Schectman's choice is rooted in a great understanding of market dynamics and investor needs. The coin's blend of liquidity and intrinsic worth positions it as an instrument capable of responding to market shifts while retaining its value. So what exactly are these 1 to 10 ounce gold coins? These remarkable coins embody both history and value, encapsulated in a tiny yet potent package. They are fractional pieces of gold, weighing just a fraction of an ounce, but don't let their size deceive you. As Andy Schectman expertly explains, the 1/10 ounce gold coin offers great liquidity and great flexibility. If I had my druthers, there are 2 coins that I would buy, or 3 coins. 1/10 ounce gold eagles. What sets these coins apart? Their liquidity, adaptability, and enduring value. In a market where shifts can be sudden, their smaller size makes them incredibly liquid, easy to buy, sell, or trade. But it's not just their liquidity that shines, it's their flexibility. These coins offer a versatile option for investors to navigate the market's twists and turns, providing a solid foundation of adaptability. Schectman's preference for these coins isn't merely theoretical. It's a choice grounded in experience. These coins have stood the test of time, retaining their value even in the face of market volatility. Schectman's personal holdings reflect his trust in their worth. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.